Welcome back to the Real Estate Mastery Series. This is video 6, and today we're tackling one of the most important steps before making your first real estate investment: analyzing your financial situation. Many aspiring investors jump into real estate without understanding their credit, savings, or budget. And that's a huge mistake that can cost you time and money. In this video, I'll help you take a deep, honest look at your financial situation so you can make smart, strategic decisions that set you up for long-term success. Let's get started! Before you start looking at properties or talking to lenders, you need to know exactly where you stand financially. Today, we'll cover 3 critical steps to prepare yourself. 1. Understanding your credit score and fixing issues. 2. Building your savings for real estate investing. 3. Budgeting for your first investment property. Let's dive in. 1. Understanding your credit score and fixing issues. Your credit score is one of the biggest factors in determining whether you can qualify for a loan, how much you can borrow, and what interest rate you'll get. A lower rate can save you thousands over time. Here's what you need to check right now. Your current credit score. A score of 620 plus is typically required for conventional loans, while FHA loans may accept 580 plus. Debt-to-income ratio, DTI. Lenders prefer a DTI below 43%, meaning your total monthly debt payments, credit cards, car loans, etc., should be less than 43% of your gross income. Negative items on your credit report. Look for late payments, collections, and errors that could impact your ability to qualify. Pro tip: if your credit score is too low, start improving it now by paying down high-interest credit cards, making payments on time, and disputing errors on your credit report. Action step: pull your free credit report at annualcreditreport.com and check for any issues that need to be fixed. 2. Building your savings for real estate investing. Real estate investing requires cash reserves, even if you're financing most of the purchase. The biggest mistake new investors make is not having enough savings for the hidden costs of real estate. Here's what you'll need: down payment, 3.5%, FHA to 20% conventional. Closing costs, typically 2 to 5% of the purchase price. Emergency reserves, at least 6 months of expenses. Property repairs and maintenance. Budget at least 1 to 3% of the property value annually. Pro tip: if you don't have enough savings, consider house hacking, buying a duplex and renting one unit, or using an FHA loan, which allows you to buy with as little as 3.5% down. Action step: set a goal for how much you need to save and automate your savings by setting aside money from each paycheck. 3. Budgeting for your first investment property. Buying a rental property isn't just about affording the mortgage. It's about ensuring your investment makes money and doesn't drain your finances. Here's how to calculate your numbers before buying: mortgage payment, principal, interest, taxes, and insurance, PITI. Expected rental income. Research market rent for similar properties. Vacancy rate. Assume 5 to 10% of the year without a tenant. Property management fees. If hiring a manager, expect 8 to 12% of rental income. Maintenance and repairs. Always budget for unexpected expenses. Pro tip: use the 1% rule. If the monthly rent is at least 1% of the property price, it's likely to be a good deal. Action step: download a free real estate investment calculator and plug in real property numbers to see if the deal makes sense. If you're serious about real estate investing, the first step is getting your financial situation in order. Let's recap. 1. Check your credit score. Aim for 620 plus for conventional loans. Improve your score if needed. 2. Save for your investment. Have cash for a down payment, closing costs, and reserves. 3. Budget for success. Make sure your investment cash flows positively and doesn't become a financial burden. Now it's your turn. Drop a comment below. What's one financial step you're going to focus on before buying your first property? And don't forget to subscribe, because in the next video, we're covering understanding the real estate market cycles. See you in the next video.